Happy Wednesday, everyone. I'm Jeff Marks, Senior Portfolio Analyst at Action Alerts Plus, and I'm here live at the New York Stock Exchange floor with Jim Cramer. And Jim, let's dive right into the action this morning because it is so interesting. So we're seeing tech stocks outperform, we're seeing growth outperform, and really that comes as the rates on interest rates have been falling, even though inflation fears are just really looming over the market with CPI data coming out tomorrow.
I blame no one for being confused. Rates should be going higher. If you listen to Campbell's call, I mean, they've not been able to keep pace with the raw costs. Sherwin-Williams, the raw costs are going up. CHIPOTLE, the price for labor is going up. So the scenario for transitory is getting less and less, and it seems much more like, other than Sherwin-Williams did talk about some supply issues, but it's obvious that inflation is very real. So what you should have is Rocket going down and UWM going down, and there's mortgage issuers, and holy cow, this is just one of those moments where I just say I see why people are memeing, because the actuality, what you're really stuck with is that other than the highest of growth that does not need that doesn't need rates and doesn't have a lot of commodity exposure, it's very hard to figure out what to do, which is why I say buy Amazon. Buy Amazon. Buy one of our favorites. Why buy Amazon? It does very well in this environment. It has got Prime Day coming up. It's historically been exactly when you're supposed to seasonally, thank you, Larry Williams, buy Amazon. And it's perfect for a play where the rates are stubbornly low. That's what you should be buying.
So Amazon, that's a quintessential growth stock. You think growth, this outperformance of growth can continue over value?
I see Facebook going up. Now, why? There's nothing in particular happening in Facebook, but it's what people buy. It's getting multiple expansion. It's not an expensive stock when you back out the cash. They go back to FANG. I mean, one of the reasons why I have always been pro-FANG is that, well, frankly, with rates low, it's what people do. They buy those things, and it's kind of like a one-for-one. Oh, rates low, buy this. Even though you could argue that may not be right, it's what the market says. And I think there's a lot of things that are going on for new people who are watching that are mystifying. Let's just take Wendy's for a second. I spoke at length this morning to Nelson Peltz, largest shareholder and chairman. And he said, Jim, when Todd Penegor was when the CEO was on Mad Money, the story was amazing. Breakfast is incredible. They're passing Burger King. They've got they just opened first this week in the UK, and the numbers are amazing. People waiting in lines. That wimpy burger is awful they have over there. And so what he said was it deserves to be much higher. He's not a seller. So, I mean, you could say, well, how did Wendy's go from 20 to 30? I guess they got to be selling, and they're not. So we're in a wacky moment. And I think when you're in the summer, thin trading, wackiness is a genuine theme. And I can't fight it. So it's case by case. I mean, when I look at Sherwin-Williams, I know that their raw costs, I know that, thank you, Frank Mitch from Fermium, that a lot of the raw costs of paint itself are going higher. Can they pass it on? It's not clear. Maybe people paint a little less. So we have to be cognizant about who can pass it on. Campbell Soup obviously can, and Sherwin-Williams says it can. So you got to find out who can pass on inflation, and if not, you got to default to the growth stocks.
Now, you mentioned this wacky behavior that we're seeing in the market right now, and if you look at the S&P 500, it's been pretty range-bound if you look past over the last few weeks. But what we're seeing in these Reddit stocks, the Wendy's, Clover Health, the action is far from range-bound as we're seeing huge volatility. So is this trading out of boredom? What do you think is, why the recent surge?
We did some talking this morning on our show, and Carl pointed out, it's out of fun. People are having fun. Now, I favor education so that when you have too much fun, things can go wrong. But I remember when I took a handicap course at Harvard to handicap the ponies. Not every class is going to be the classics here. And what was interesting was I used to go to Suffolk Downs pretty much every day and just had to pick the one race that I like. And it was a lot of skill. And then I read Andy Byer's incredible book, Picking Winners, and talked about how I got involved in Confessions of a Street Addict because of the ponies. Well, I mean, is this different from the ponies? I come back and say, hey, what's the matter with the ponies? I don't come back and say, yeah, it's like the ponies. You do the ponies right, you make money. Andy Byer's book is amazing. You do this right, you make money, but you have to maybe take a little bit of a course. You have to understand that you might be riding the wrong horse. But I have always said that there's a component of gambling. I do bull market fantasy where we merge stocks and jocks, and I accept it. Now, you could say, that's outrageous, Jim, you're endorsing it. What I'm saying is the opposite. If you're going to do it wisely. And this is why how to speculate wisely is something I write about every day in Real Money, and how to invest wisely is what we do at Action Alerts. We do not do any of this, but I want you to invest wisely. Wendy's, did it go too far? Well, I would tell you that if you hold it, I think it could go up a lot. GameStop, you need to invest wisely. I mean, to me, GameStop's been great, so you take a little off the table. But the people who are riding these ponies, like GameStop, they hate to hear that. And because that breaks the, it might break the short. You need everybody buying in order to be able to keep the short going.
Now, one thing you've always taught me is you can never go broke taking a profit. So whenever we see a stock makes a big move, whether it's something in our portfolio at Action Alerts Plus or what we're seeing in this meme stock, you take a little bit off the table. Is that something that you would recommend for some investors who frankly have just caught the fastest of fast money in one of these names?
Yes, I would. Now, I'm not trying to be heretical, and I'm not trying to be anti. I know it comes off as anti. And I know that there are people who feel, well, Jim, you're a hedge fund manager, and you didn't know, and you're a baby boomer, whatever they use to denigrate. No. Okay, listen, let's just play it out here. The way that you have longer-term wealth is to not give back a profit. Okay, it's something you learn on day one. Now, a lot of people feel like I was at Goldman, and I first learned, and then I taught. And a lot of people feel that all of that is useless and baby boomer. But is it really an age thing to take a profit? In the same way that when my mom would play the slots and she'd hit, she'd stop and say, let's go buy a sweater. I mean, there's nothing, it is not antithetical, it's not heretical, it's common sense. But common sense could be in the eye of the beholder. But I was able to make a lot of money using what I think is a lot of common sense. People always say, well, Jim, you did it because you used every edge, legal edge, whatever. No, I mean, I did common sense. I took something off the table and made a lot of money, and I'm proud of that. And maybe I could have made even more money. That wasn't the point. The point is that I made a lot of money by being prudent. And that may not be in style but right now, but it always comes back to being in style. Prudence is a good thing when it comes to managing your own money.
And I just think one of the common investing themes is you want to buy low and you want to sell high, and you can do that by what's going on in the action right now. And if you have conviction in a long-term story, that's where you're buying low, and that where you would have that really would set your portfolio up for the future. We always talk about this at Action Alerts.
Now, but let's take my friend Adam Aron. He's the CEO of AMC. As the stock goes higher, he's able to sell stock for the company, which then allows him to service the giant amount of debt he has. So is that one where you can buy low and sell high? Well, it's already moved up. But you can say that there's a mechanical issue that could continue to drive it higher, which is the need that it becomes more valuable as it goes up. Meaning, and I don't want to, again, mix the metaphors here, but if you're Adam Aron, you can't pay the debt unless the stock goes higher. Stock goes higher, you can't pay the debt. And so that therefore that's a virtuous circle up. GameStop, they were able to pay down some debt because they had the virtuous circle up. So there is an element of pure finance that is positive, but that doesn't necessarily mean that I want to be involved in GameStop. They report tonight. I wish everybody who's in it well. And again, not facetious. I want everyone to make money. I mean, I made money on American Pharaoh. I made a killing on American Pharaoh. People felt you shouldn't. I had the Win Play show. I mean, the IRS was at the window. It's one of the greatest days of my life. But was I foolish to let it ride, especially when you had American Pharaoh paying almost nothing? Yes. It was foolish, but I made money being foolish. I have seen people at the card table. You're around, and there's a clown who's got who's got an 18 with the dealer showing a king, and they hit, and they get the 3, and they win, and I'm like trying to count the cards, and I'm completely thrown off because that person was supposed to stack, and suddenly there's a 3 which should have gone to me. I mean, but that person made money. So there are ways to make money. A lot of it is luck. I think there's a lot of what's going on. If you sold Wendy's this morning at 30, you were prudent. It's back to 26. Maybe do it again. But there's prudence, there's luck, there's education. I called for education. I said Gensler ought to do a series of town hall meetings. Arthur Levitt did when he was head of the SEC. And I deleted my mentions column with the advice of my wife. But I decided, okay, let's see the reaction to my call for education. It was vicious. I mean, people were playing a tape I did years ago where I was trying to explain what happens. It's back scenes with my old friend Aaron Tass, and they say, well, Jim's a crook, Jim's too old, Jim's fat, Jim's bald. Hey, okay, I'm not fat. I've lost a lot of weight. But, the essence is that to attack the messenger. That's why I gave all these people Adams 35918, which is my late mother's phone number, so they can call her. I did throw snowballs. Look, the Eagles were playing terrible. What are we supposed to do? Say you guys are great? I mean, they were booing the Sixers the other night for bad play in the first half against the Hawks.
I heard some boo birds out on Danny Green last night.
Absolutely. So I mean, that's what I do. I mean, I'm from Philadelphia, and you do it. I have a bad arm, but you're up. My dad got hit by a beer bottle in the body bag. It was a Buddy Ryan game. Who came, by the way, to his grandson was in Summit High in my daughter's class, and they were friends. And Buddy Ryan came to games. It was pretty cool. But I do think that there's a lot of luck involved, and I want people to recognize that they might be making money out of luck. And don't confuse luck with prowess. Don't confuse luck with prowess.
Yeah, I think it's so interesting. You mentioned this virtuous cycle earlier,
Yes.
and I think that when balance sheet risk, if that's one of the key risks of a stock, once that gets taken off the table, that could set up a nice rally.
Yes, and we spend a lot of time in Action Alerts talking about balance sheet. If you look at the companies we own, you will not see a single balance sheet challenged company. Why? Because I've lost a lot of money with companies that have a bad balance sheet. But as AMC goes up, yeah, Adam Aaron's got a better situation. Good for him.
Look, we spend a lot of time on these Reddit stocks. I just want to get your pulse on one more, and that's Clover Health. Obviously, huge move. This is one of
Hindenburg did a really excellent analysis. Nathan Weiss, he's really smart, that explained the problems. But that meant a lot of people got short because it was an intelligent short, and they're getting destroyed by people who don't give a damn about the short story. Nathan's an excellent analyst, but anyone who listened to him, not for one of not being smarter, just got overrun by people who said, let's get them. Let's get the shorts. And it's working.
Now, I remember Hindenburg also came out short on Nikola. I think it was last summer.
Brilliant analysis.
And when I'm thinking about Nikola now, all I can think about is what's going on with Lordstown Motors, because they came out yesterday saying they may not have the capital to have the production of their cars. What do you think about Lordstown?
I had the CEO on, and he was talking about how he had orders, and then it turns out that he had letters of interest for orders, and he said that shouldn't be confused with orders. I'm sorry, just don't talk about it. I mean, he should never have said. He was very ill-advised comments he made and got people in the stock, and he should have said, listen, we haven't sold a car, which he ultimately did, but that I think our car is going to be great. See, that's what Fisker did. Fisker came on Mad Money and said, I think our car is going to be great. I rode in a Lucid, and the CEO said, I think the car's going to be great. I said, Lucid is just an exciting car. It's great. So, do some work. If there are actual sales, good board, actual orders, then you might have something. I'm not against that kind of speculation at all. At all.
Yeah, and the importance of due diligence matters too, because look, Ford, they're going to be a big competitor to Lordstown Motors as well with that F-150 Lightning.
People better realize that Jim Farley's for real. My wife said, listen, there's a cool color for this Maverick. We have a Ford dealer. It's about a half mile from us, and we're going to go. She thinks it might be ideal for my daughter. It starts at $20,000. I'm not a commercial for Ford, but my daughter she likes a stripped down car. Shouldn't care. So it's kind of like it's a car with a bed. And Ford's got some real products, and I think that Jim Farley has said Elon Musk, I'm going to crush you. They do have a lot of scale for it.
And when that F-150 Lightning came out at that attractive price point, Wolf Research, they actually put a $1 price target on Lordstown Motors, basically saying they're not going to be able to compete.
That's $1 low.
You don't see that too often on the sell side.
$1 low. It's a low target there. Meanwhile, it's a growth stock day. J&J is up, and it's very interesting. Is a lot of people are saying that J&J, even Gottlieb, that maybe you don't want J&J because that may not on the new variants. But it doesn't matter because people want growth. Now, is it any more silly that people want growth in light of what Gottlieb was saying versus, say, a meme, a Wendy's? No, they could be the same. The difference is that the people who are meme people are angry, vicious people who want to destroy people on the other side of the trade. And the people who are buying J&J think it's a good investment.
Now, Jim, you had Activision Blizzard CEO Bobby Kotick on last night. He was talking a little bit about the Call of Duty Endowment Fund. Yesterday, we got into a little bit what MasterCard is doing, the great philanthropy work they're doing. We know we're close followers of Mark Benioff, the CEO, founder of Salesforce. It's a position for that charitable trust. And what he always says is business as the greatest platform of social change. It was all through Trailblazer. So can you talk about a little bit about that more, about business being the social, the greatest?
Excellent piece in Fortune that I was going back and forth with Mark. He's on holiday about some of the things. You know, I shouldn't say excellent piece because really the spin of the piece as shareholders is that he's doing less and less with the company. Mark has many things he can do very well, and he's not doing less and less with the company. He's fine. He just wants the Slack deal to close. But Mark is a huge believer. Remember, he's up against Facebook to get the smartest people. He's up against Alphabet. He's up against Amazon. Well, how do you do that? They don't just play for money. As he always says, his job isn't just to sell more software. His job is to lead, to help, to be a steward of the earth. And, you know, smart people just say, you know what, I'd rather work for a little less, and Mark does pay top dollar for some things, and work for Salesforce than I would go be at a sweatshop. And Mark's getting great people, and I don't want to sound just like he's for great people, but what it does mean is that he's going to get people who are passionate and who will not leave after they've learned everything, which is your biggest worry. And MasterCard feels the same way, by the way.
And we know ESG investing is such a huge theme. It's a growing theme. That's where a lot of investor dollars are going to in the future with institutional investors.
Absolutely.
Is this something that they'll look for?
Yes.
The initiatives that these companies are putting out, Activision Blizzard,
Absolutely.
MasterCard?
At the end, I mean, I mentioned that to Bobby. I think Bobby Kotick. I think he was surprised that I actually mentioned the initiative, 80,000 people he's gotten jobs for. By the way, the leader in that is Starbucks, which was a position we used to have. There are people who do good things everywhere, and yet business continues to get a bad rap. And I feel like it's my job to say, listen, it doesn't get a bad rap, and I don't really care what people say about me. I've seen too many companies do too many good things. Microsoft is at the absolute forefront of trying to get the footprint lower, carbon footprint lower, something that I care about passionately. And by the way, if you don't care about it passionately, you know, I mean, I think you're ill-advised. I don't know what else to say. I think you're ill-advised.
All right, we'll leave it right there. It's time for the Action Alerts Plus show that we'll do right after this. I'm Jeff Marks for Jim Cramer. We'll see you tomorrow.